A very good afternoon to everyone. We welcome you all to the webinar today on the topic due diligence on project financing. And this is organized by the Banking Financial Services and Insurance Board of the Institute of Cost Accountants of India today. And we are really privileged to have with us eminent speaker today, Ms. R. Sumitra Madam. She is a credit management specialist. We also have with us our chairman, sir, Semi Chittaranjan Chattopadhyay, sir, and Semi Dibyendu Roy, sir, our HOD, sir. They are in absentia today and they have sent their best wishes for the program. We have CMA Dr. Aditi Das Gupta, madam. She is the Joint Director of the Institute of Cost Accountants of India. And we also have our other BFSI officials. So we welcome all of you. So just before we start, we are playing the Institute anthem, and then we will continue with the program.
असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय
मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय
असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय ॐ शान्ति शान्ति शान्ति।
I would like to now introduce our speaker, Ms. R. Sumitra Madam. She is an experienced financial professional having keen interest in credit risk management, due diligence, and project finance. She is an MBA CFE CITA by qualification. She is a public speaker and writer. She has volunteered as guest faculty for reputed institutes in India. We welcome you, Madam. It's really a privilege for us today to have you with us today. So now I would request Sumitra Madam for his presentation.
Thank you so much, Indakshi ma'am, for that wonderful introduction and setting the tone for this webinar today. I will just take one moment to share my screen with everybody. I hope now it is visible to all. And today we will be discussing on due diligence in project financing. And as we proceed with the webinar, I will be requesting the participants to post their Q&A in the Q&A section of this digital platform so that I can take up the query and answer them. Please don't hesitate in asking any of your questions pertaining to today's topic. It will be my privilege to resolve your queries. The very purpose of this webinar is to ensure that we share some knowledge and experience in this platform. And I again appreciate the Institute for taking this initiative, bringing all the students together, and then also providing me this opportunity for the webinar. So let me begin with the very fundamental of the context of this particular topic, due diligence and project financing. So can anyone tell me in the chat box also, if you are possibly able to do, What do we understand by project financing, or how it is different from the normal financing? If you are able to put it in the chat box, you can very well put it, or else I will proceed with the complete discussion and take up your queries. Can anyone come up with this? What is project financing, or how it is difficult from a normal lending? I am yet to see any remark in this. So not an issue at all. I will take up the session, and going forward, I will take up your queries, if any, that comes in way of this webinar. So when we say about project financing, it is quite different from the normal lending decisions that we do. When a bank goes for lending a particular machinery or any construction project or any under construction property, in that case, the bank is having a confidence that the particular borrower is having some present cash flow to repay the loan. Say, for example, I am a textile manufacturer entity. I am already running a business in my place of activity. Now I am approaching bank for another term loan for acquiring another machinery for my business. In that case, the essence of due diligence which is required by the bank is very less, because the business is already stable, the promoter is already in that line of business, and all the existing cash flow are generated from the existing activity of the entity. Then the buyer, supplier, and the business value chain tie-up is already established. Now let us consider another case. There is one person who approaches bank and he says that I am going to set up a project. The project is construction and establishment of hospital. So think of the level of risk which is associated with this construction and establishment of a hospital. It requires humongous capital expenditure. It requires lot of skill sets to understand what kind of speciality will be there in that hospital. It requires purchase of many delegate equipments. It requires lot of clearance from the government and other authority across that state to run the hospital once everything is set up. And everything is uncertain, because the very idea of creation and establishment of hospital is at a very nascent stage. It is just in the papers, it is not physically present anywhere. So the level of risk which the bank will be undertaking in financing such kind of project is humongous, is very huge. Hence comes the necessity of a very deep due diligence in project financing. Because project financing, in simple terms, means when a financial institution is lending for a capital expenditure, where the repayment of the loan will be made from the cash flow which is generated from the project. So as I gave you the example of setting up of hospital, whatever cash flow that will be generated after the commencement of operation of that hospital, that cash flow will be the source of repayment of the project loans. Now it may happen whatever the borrower is envisaging, that is not happening. Suppose the borrower is saying it will take 15 crores to set up this hospital, but due to certain project contingencies, the cost may go up to 20 crores. Or it may so happen that project was started initially on time, but it got delayed due to delay in getting clearance from different authority. This is known as time overrun. So these kinds of complexity arises in project financing, which are not available, which are not generally found in small lending like lending for a machinery or lending for a construction of a warehouse like that. So comes the challenge in project financing, right? So I hope the basic fundamental concept of project finance is understood here. I will first take you through this particular slide. This may be evident to you. Now, my next point of discussion in project financing will be what are the initial stages of project financing. Once I describe the initial stages of project financing, then I will take you through the different due diligence mechanism which can be adopted in project financing. So when a applicant wants to avail loan for project financing, what they will do is that they will prepare a DPR. DPR means detailed project report. The detailed project report will have all the informations pertaining to that particular project. Like as I am showing you in this particular screen, that what will be the cost of purchase of land and the site development where they want to construct the hospital, what will be the cost of building and civil works, what will be the cost of the plant and machineries or the equipments which they want to put it for the hospital, what will be the electrical installation cost, utility cost, other expenses, then preliminary and preoperative expenses, contingencies, their margin for working capital, and how it will be funded by way of promoters' contribution, by way of term loans from different banks. So it will have this financial information. Along with this financial information, it will have some other informations like brief background of the promoter, a brief background of the project which they are planning to undertake, how they have assessed the viability of the project, like whether there are similar hospital in that locality or not, from where they will be getting the doctors for the hospital, how many beds they are willing to keep, what kind of speciality they are planning to do, what kind of occupancy rate for the beds they are planning to keep, then what will be the cost of each visit and each doctor consultation, uh, all these things, all the information they will be providing in the detailed project report. This is like when an individual goes for a job interview for the first time in life, they prepare their resume, they carry their educational certificate and everything. Similarly, the detailed project report will have the complete written script of the project which they want to establish. Now, from bank's perspective, what they will do? See, in this table, I am showing you certain figure as promoters contribution. This promoters contribution is very, very, very critical. Bank need to ensure that whatever cost they have mentioned for the project and whatever source of finance they have mentioned for the project, these are properly vetted, and it is to be ensured by the bank that what will be the source of this promoter's contribution. If a party is saying that they will infuse 89.71 crore, from where they will infuse this 89.71 crore. Going forward, I will show you certain tools of due diligence, and I will also discuss certain cases. Whatever I am discussing at present, I am giving you a brief fundamental overview. Okay. So once the bank gets the project report, bank will ask certain questions. The questions are generally, who are your present banker? Did you approach your present banker for the loan? What is the opinion of the present banker for the loan? Then bank will do certain preliminary checks like CIBIL verification, MCA verification, UDIN verifications of the balance sheet, etc. And then bank, since bank are not technical expertise, like what will be the technical cost of constructions of land and building, plant and machinery, banks are not bankers are not expert in this, so they hire the service of one of the professionals who are known as TEV consultant. I will also explain the concept of TEV, and this TEV consultant will do the vetting of the project reports which is submitted by the applicant, and they will say whether the project can be viable or not, whether the promoter's contribution is possible or not. So after all this preliminary due diligence and everything, bank will go for the lending decision, and after compliance of the given sanction terms and condition, bank will disburse the amount on stage wise basis. This is what is the fundamental concept of project financing. Till now, is there any questions you want to post? You can post, because now onwards I will be going deep into the concepts. Yeah, SWOT analysis is essential. Yes, SWOT analysis is taken care by the TV consultant. Once I am making the screen full screen, just give me a moment. I hope you are able to check the details now. PPT is clear now, I hope, because one or two messages I found that PPT was not clear. I hope it is clear now and you are able to see the screen. Please confirm, anyone. Yeah, I believe it is fine. So I am proceeding here with. So now, what are the general challenges which are found in project financing? The general challenge which are found in project financing is that first, many a times the cost of project may be inflated by the applicant, and it becomes very difficult to estimate the correct cost of project. Second bigger challenge which is found is that due to unforeseen situation, there may be cost and time overrun impacting the viability of the project. The third biggest challenge is promoters contribution, whether the promoters are really contributing to the project or not from their own source of capital or not. It becomes very difficult to ascertain in project financing, because the gestation period of a project finance is generally very higher than a normal term loan financing. So it becomes very challenged because there may be several round tripping of transactions through different balance sheet, and it may bank may fall prey to the fraudulent transactions which the promoters tries to undertake. Next thing is end use of fund, whether the disbursements are made correctly to the suppliers, whether the assets are being created. This also becomes difficult to ascertain. So considering the nature of project financing and the general challenges which are found in project financing, it becomes essential to go for deeper due diligence, or I can say enhanced due diligence. Okay, so there are certain procedures which need to be followed in project financing by way of due diligence. Today, I am going to cover those mechanisms, and I will appreciate that once we complete the discussions, please post your queries. I will take each and every query and answer your questions. Okay. So since it is a webinar, it is not a session. Uh, I am also feeling bit uncomfortable with the monologue. Generally, I go for a discussion oriented approach, but it is a webinar and we must adhere to this mechanism of this session today. So I look forward to your participation by way of questions.
You're in mute.
Okay, just a second. Am I audible now?
Yes, yes, yes.
Was I on mute for long? Oh my
No,
God,
no,
I
no,
okay.
no, 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 no,
Okay,
just
okay.
for this.
Yeah. So when we talk, and ma'am, can you please confirm the PPT is now clearly visible?
It's visible, it's visible.
Yeah. So when we talk about promoters check, we have to ensure that the promoter, whether there was any default, delinquency, willful default, any other kind of antisocial charges on the promoter, whether they have history of doing a business. Say now for a simple reason, if I take two people from the business industry, one is Mr. Ratan Tata and another is Mr. Vijay Mallya. Obviously, you will have two different approach towards these two person. The reason is only because of the character, capability, capital, adhering to the conditions. All these skill sets of these two persons are different. So promoters check is very, very essential and it is the fundamental. I always give an example that credit is nothing but a marriage. Just as in a marriage, we do the due diligence of the people who are going to get married. We get to know about the family background and everything. Same is to be done in credit as well. So how do we do the promoters check? The very fundamental thing is generation of the CIBIL report or credit information report of the promoter and the business which he is presently doing, if at all he is doing the present business. In CIBIL report, what do we check? In CIBIL report, there are different address which are mapped in report. We have to cross check those address with the address proof which the promoter is providing to us, and then we have to check how many loans are being availed at present, what is the repayment of the loans as on today, whether there is any overdue in it, or whether the repayments are regular. Out of all the loans which are present there, how many loans are unsecured, how many loans are secured, what is the frequency of inquiry of new loans in the CIBIL report. All this will give a fair idea about the conduct of the promoter. If they have, and what is the CIBIL score? Of course, many loans are having the CIBIL cutoff rate, so CIBIL score also becomes important. I will just take a moment and I will show you the MCA DIN search also, because if the promoter is a company, if the promoter is a director of the company, then we have to also go for DIN search. When I will be showing you the hands-on due diligence, I will show you the DIN search and all. And since CIBIL is a very private document, hence I am not sharing any CIBIL report for this session today, because it is not prudent on my part to share someone's CIBIL report in a public forum, right? So that is why I'm not showing you CIBIL report for the education purpose right now. Now I would like to tell you one incident, experience sharing with respect to promoters check. Nowadays, uh, we are having digital footprint for everyone and anyone in the in this world. Even if I type my name in Google, somewhere it will show my picture, or it will show some article which is written by me, because every one of us are having digital footprint. So I will always suggest, if you are handling any such file for financial supporting as a banker or as a CMA, please Google search the name of the promoter and the name of the business. That will give you a lot of input. I share one experience in our real life in bank. There was one promoter. He was a well-known industrialist, and he was approaching the bank for some credit support. Okay. And the CFO of the company was putting lot of pressure uh, uh, on, on the bank that you take the call immediately, you do not delay the decision making, because we are getting sanction letters from some other bank, then we may not deal with you. Within 1 or 2 days of putting the file, this kind of pressure they were creating. Now the credit officer who was doing due diligence, apparently the file and everything appeared very clear, but there was one missing link. The promoter, there was no information as to where was the promoter for last 2 years. Okay, every documents was pertaining to 2 year prior or at present. In between 2 year, nothing was there. So he Google searched the name of the promoter. It was found that the promoter was convicted in a murder case, and he was in jail for significant period of time. So lot many informations you can get by doing Google, by googling the name, which you may not get from balance sheet, income tax report, Aadhaar verification or PAN verification, because everyone knows that I have to keep my Aadhaar appropriate, I have to keep my PAN appropriate, I have to keep my balance sheet appropriate, I have to keep my income tax return appropriate for consideration of my loan application. But people fail to keep this in mind, that continuous monitoring can be done with the help of Google. This was one incident, and another incident which I had experienced was, one entity was approaching our bank for takeover of the facility from some other bank. The papers were almost perfect. We could not actually make out the reason why he was approaching us for takeover of the facility. There was no definite justification. The borrower was very cordial, cooperating with the bank with basic process and everything. But as I was not satisfied with the reason for takeover from some other bank, I did Google of the entity's name, and then I found that the promoter was, the entity was listed in the BIFR list, SIC company list. And this information was not available in any of the document. So when you do the traditional promoters check, like verification of CIBIL, PAN verification, Aadhaar online checking, also please Google check the name of the promoters in the general Google website that may give you some qualitative information. Next comes the vetting of project report. But before vetting of the project report, I would like to share with you certain digital tools for due diligence. Just give me a moment. I will share my screen. So the other tools for due diligence is first is MCA 21. In MCA 21, we do the since all are CMA, I will not take much of a time here. In MCA 21, we do the customer master data checking, company master data. We put the details here and we fetch the information about the entity. This is one of the fundamental due diligence which we need to do. Any company say so I have taken one entity here. All the details are there that the company is active and compliant. This is one of the vital observation which as a banker we check that whether the entity is compliant or not. What is the authorized capital? What is the paid up capital? When was the last balance sheet filed? These information, and then we check the index of charges in which all bank they are enjoying credit facility. Suppose the borrower in the project report is not mentioning any information that this is my loan details, but if we get to know the index of charge from this MCA, we can cross verify with the borrower that we have seen you are enjoying credit facility from this bank, then provide us the details of sanction and security creation. Just a second. हाँ सर गेट पे रख दीजिए प्लीज गेट हाँ अप्रूव कर दिया आप वहां पर मेरे डोर के बाहर रख दीजिए G401 आप मेरे डोर के बाहर रख दीजिए प्लीज ओके sorry for the interruption. So you will get to know this creation of charges. Then who are the directors, and with this DIN number we can also check whether they are director in some other entities or not. So this is again in case of a company we do this preliminary due diligence through MCA, right? So in this way, we can do the DIN verification of the customers in the MCA portal. I hope this fundamental check is clear to everyone. Now I will take you through some other tools for verification. This ecodes.gov.in is another tool that will give you a detail if any cases are pending. Because in my real experience in the banks, what I have seen is that certain remarks like suit filed, CIBIL, these observations are there in the CIBIL report, okay? And borrower may be reluctant to share the complete details about the cases to the bankers. So we can check the case history here. Suppose if I go to this district court services and if I put the case status and the 16-digit number, just a second, the case number here. If I put the case number here, then it will provide me the complete details. What is the present status of the case? So this digital tool will be also helpful for us for taking a preliminary idea about the status of the any case litigations which are pending. Now, next part is the due diligence pertaining to vetting of the report. So this I have given you the information about the directors. I will also tell you that what need to be done when we are doing due diligence in case of proprietors and the partners. We can do lot of due diligence through the ITR documents that I will discuss. Okay, now coming to vetting of the project report. As I told you that project report has the complete details of the project which the promoter is envisaging. So for taking credit decision, it is the preliminary action which is to be done, right? So how is the vetting done? Bankers are not technical person to do the vetting of the project report. What do? They take the help of an expert known as TEV consultant, Techno-Economic Viability Consultant. So this vetting incurs certain cost. It is therefore every bank they set up a minimum amount which is to be financed for going for this project report vetting. In some banks, if the loan amount is more than 10 crore, they go for project report vetting. In some bank, it may be 25 crore, then they go for project report vetting. Now, what do this person do? This person will take the copy of the project report. He will reach out to the loan applicant, cross verify all the documents and have an interview discussion as to how much experience they are having in that particular line of business. He will also check the documents given by the chartered accountants. He will also check the account statement to know whether promoter contribution can be done, or if it is already done, what is the status of it, how much is the liquidity available with the promoters based on their net worth. He will also verify the individual invoices which are given for the purchase of equipment and everything, and an overview about the overall industry. Then he will provide a report that this project is viable or not. Based on that report, the bank does all other credit assessment and then sanctions the loan. Vetting of this project report is very, very essential. And if at all the report is lacking clarity, it is also essential to have detailed discussion with the consultant to understand his point of view about the business. Now, as I told you in the previous slide, this promoter's contribution is a very critical aspect. Generally, in sanctions, it is stipulated that CA certificate is to be obtained for the ensuring contribution of the promoter. But CA certificate will not suffice. If I provide you a CA certificate, but if I don't infuse any of the capital in the business, then it becomes a jeopardy. Okay, so hence I will show you some other documents which we can use as a tool for promoters contribution. Just give me a moment. I am uploading some other documents here. In meanwhile, based on what we have discussed so far, if you have any queries, you can put it in the chat box. I am taking a moment just to open the files because I have many documents to show all of you. Yeah, so when it comes to capital infusion, in case if the entity is a company, in that case, we can also cross verify based on two methods. One is once the capital is infused in ROC or MCA 21, the amount of issued and paid up capital increases. You will see a change in the amount of issued and paid up capital. Second, another document which we can use to cross verify is the pass 3 certificate, which is return of allotment. So here you can see that number of securities allotted 92,000. What was the nominal amount of share? That is rupees 10. Total nominal amount is 9 lakh 20,000. And what is whether there was any premium involved? Then what is the amount of premium? Total premium is this, and this was the amount of premium which was paid. And the after the allotment of share, the authorized capital, issued capital, subscribed capital stands in this way. So we can also ensure and confirm that share capital was infused with the help of seeking this document in addition to the certificate given by the chartered accountant or the report which is generated from MCA 21. So this is an additional document. Now I come to cases of due diligence in case of an entity who is not a company or not a director. Okay. So this is a document which is the ITR of an individual, where when the individual is filing the ITR, the question is asked whether you are a director in a company at any time during the previous year and what is the shareholding in those company. Why this question is very essential? Because in bank, generally what is observed is that when any fraud is taking place, it is through diversion of fund or siphoning of fund through associate entities. Now, 20% or more of a shareholding indicates that that particular company is associate of this particular entity. And then if we see in the account statement that there are lot of cyclic transaction between these two entities, that may be a red flag. So in case of an individual, in case of a company, we can cross verify through DIN search. But in case of an individual, income tax complete computation set speaks volume about the individual and the nature of business activity which he is undertaking. Right now you can see that name of the company, what is the PAN number, what is the number of shareholding, these details need to be provided. And it may play an essential role in understanding the relation which the entity is having with the other entity. Now I am showing you this particular document. This is also an income tax return documents. See, many a times we face challenge when a proprietorship comes into for a loan. I will share you some example where proprietor had taken humongous amount of loan from the entire industry. I will discuss about that risk. But prior to that, I am showing you this document. Largely proprietors balance sheet are very simple. We do not get the emphasis of matter. We do not get notes to accounts. We do not get key audit matters or auditors report and everything in the proprietors balance sheet. How do we cross verify the information then? We can cross verify the information through this income tax, because here the proprietor's capital, all the loan details, unsecured loan, complete fixed assets details, every every single information of the balance sheets will be available. So from this we can cross verify the details in case of a proprietor. Even the figures pertaining to the PL statement can be cross verified from here. Now, this is the fundamental aspects which is applicable in all types of credit. And why I am emphasizing these fundamental point is that because in my personal experience, I have seen borrowers approaching bank by submitting fake balance sheet. I will tell two of such instances to you. One was the case of taking from other bank. Preliminary due diligence was satisfactory. Bank was ready to lend. It was a proprietorship entity. So we had a custom to write a letter or mail to the chartered accountant along with the copy of audited balance sheet, seeking confirmation that whether it is being audited by them or not. We were about to take the credit decision. Just before that, we received a letter from that firm that this balance sheet is not audited by us. Anybody dealing in this balance sheet must do so at their own risk or peril. And we did not go further with the file. Now, you may say that presently UDIN is available for verification. Of course, UDIN is a very big reliever for bankers for due diligence. But when we go to verify the UDIN information also, it will only provide 3 or 4 figures from the form 3CD. It may so happen that the borrower may keep those 3-4 figures intact and do all the fudging in the remaining part of the balance sheet. So it is customary and advisable to seek a confirmation from the auditor when dealing with the balance sheet of the proprietor and partnership. Another was the case where the customer was having a vintage of 15 to 20 years with our bank, and the conduct of account was not satisfactory. Account was highly stressful, and then while doing a due diligence as to whether to classify that as a fraud or not, we wrote a letter to the chartered accountant in the address which was given in the website of the ICAI. Immediately within 2 days, we received a call that we have not audited this balance sheet at all. Our name and membership number is misused by so and so, and we are ready to take legal action against that person. So be it a project financing or be it any financing, these are certain fundamental due diligence which is to be done. I hope I am clear with this. And in case of a company, it is essential to generate the ROC search report, cross-verify the financial figures given in the ROC search report with whatever balance sheet the borrower is submitting to the bank, right? So this is the financial due diligence which we need to do when we proceed with any of the files. Right, then I will come to other part of due diligence. Let me once again take you all of you to the PPT. Yeah, coming to capital infusion. I have told you already that capital infusion can be cross-verified from the balance sheet, and it can be cross-verified from MCA portal, and it can be cross-verified from past 3 portal. But certain other lapses are also evident. I have personally seen an instances where a company was to bring in capital close to 50 crores. Okay, and CA certificate and everything was given that the capital was infused. Now, after preliminary disbursement of the credit facility, it was observed that the project was not taking off in the same pace as it was to be done. Okay, the company was coming up again and again saying that due to this clearance issue, that clearance issue, our project is getting stuck. We want additional capital to proceed further. And this additional capital, uh, I want in the form of my own promoter's contribution and in the form of loan from the bank. Now bank was suspicious that why he is coming up again and again and asking for a loan. Then a deeper forensic oriented due diligence was found, and then it was found that the balance sheet from where the company was saying that we are going to infuse 50 crores of capital, the size of balance sheet of that particular entity itself was some 5 or 6 crore. Now a company having a capital of 5 or 6 crore, how it can provide a capital of 50 crore to associate for going for promoters contribution? So this transaction screening and also doing due diligence of the balance sheet of the associates and subsidiaries, these are very, very essential to ensure that capital infusion is done. When I talk about transaction screening, I mean to say that going through the account statement of the borrower, it is very, very fundamental thing which need to be ensured. Now, see, for us as an individual, even if we screen our own account statement, we can get an idea that where our maximum expenditure is routing, whether it is for purchase of the grocery of the house, or whether it is for medical expenses, or whether I am spending large amount of money in any restaurant, or if I am paying EMIs, I can get an idea, right? Similarly, in case of a borrower, transaction screening can provide n number of information. It can tell us what all loans are being repaid from the account, whether personal expenses are met from the expenses from the account of the business, what is the total amount of debt obligation or the EMI are being paid, whether there are frequent transactions with the associate entities or not, whether any suppose some the project which they are setting up, if they are saying that we have made advance payment to Mitsubishi for some equipment, whether in the account statement that payment to Mitsubishi is reflecting or not. These will give a fair idea about the nature of transaction with the entity is taking place. From banker's point of view, bank emphasize whether there was any instances of check return, payment returns in the account, what kind of any penal charges are applied or not. That will indicate about the delinquency in compliance, these information. Again, with respect to account statement, I would like to share some incidents. As a part of due diligence, we were doing the account statement review, and the quantum of transactions were very satisfactory. Huge number of transactions were reflected. It was picture perfect. But still, there was a feeling that a confirmation from the bank need to be obtained. When the confirmation from the bank was obtained, it was found that the account statement was fake. The PDF was edited with addition of number of zeros in the file. Whatever check return or payment return was there, that was deleted by the borrower. So it is, I mean to say, PDFs are editable. When we talk about transaction screening, apart from taking the copy of the account statement, it is also advised, if it is possible, to cross check any random transactions in the digital portal, then it becomes even more efficient and genuine in terms of verification of account statement. That is very, very essential for any credit decision. Last 6 months, 1 year account transaction to be screened. And whatever bigger transaction, amount of transaction has taken place, it has to be checked, whether it is with related party, whether same DIN number entities are being transacted, or any amount is going to personal file. Because I have seen cases where from a cash credit account, payment are made to jewelers. Payment are made to clothing shops like Ginny and Johnny, like that. So we can get to know an idea about the business transactions. Once this is done, then we have to go for market feasibility. I will come to that point. Prior to that, let me take you through another document, because I don't want to keep this session boring with just my delivery. I am here to show you some documents as well. See, this is also a very important aspect which is gaining momentum in the present day. It is the outstanding amount in the income tax. You all will appreciate that whenever any statutory dues are pending with any authority, then that liability becomes the prime liability. The liability of the bank or financial institutions becomes a secondary liability. Moreover, if there are any outstanding amount due, in that case, higher chance is there that the applicant is willing to avail loan to repay these dues, instead of creating the asset for which he wants to use the loan amount. So nowadays it can be also used as a mechanism of due diligence, that we obtain a certificate of outstanding amount of dues from the applicant when we collect all the documents for the loan, or when you are also supporting someone for the lending, this can be done. So look at this particular outstanding amount. First, the outstanding amount was somewhere 12 lakh. Then accrued interest was 14,000. Then outstanding amount increased to 39 lakh. Accrued interest 41 lakhs. Then outstanding amount again 20, 21, 91 lakh, and interest is 96. So this particular information is giving a clear indication that whosoever this entity is, this entity has not been paying the statutory dues on time, and as a result these amounts are outstanding, and there are high chances the loan may be turned bad, because the loan is may be utilized for repaying all this, and after that the entity may not repay the loans to bank. So when we are onboarding client, it is also essential to know what is the position of the outstanding demand with respect to income tax. I will also show you this thing. Oh, sorry. This is some other file has got opened. Yeah, this uh, This SFT transaction report also provides information as to what kind of transaction has taken place in one financial in the entity's account. So here we can see that Axis Bank, this entity has opened an FD, and similarly if any stamp duty is paid for any purchase of property, the such informations are also recorded in the SFT, which can provide an idea about how the fund was utilized, whether the fund was diverted from the business or not. These are essential in case of project financing, because when large amount of camouflaging or diversion is already done, then the entity comes for project financing, because they can get large amount of money at one particular point of time, and moreover the repayment periods are generally long, so they can defer the debt burden over a period of time. So the risk of diversion is very high in project financing. Hence, this kind of due diligence will sound effective. Then next, I will show you this particular PPT. Now, next point which I want to cover is market feasibility. Market feasibility means whatever business the promoter is saying that they are going to set up, whether that project is by any chance viable or not. Because I tell you one example. If someone is saying that we are going to generate power and we are going to go for a tie-up with different government entities, say West Bengal CSC, then in say in Delhi the Delhi Electricity Board, in Bangalore the Bangalore Electricity Board, and we are going to generate the power and supply. Whether the agreement is already done, what is the price at which they are willing to purchase per unit, whether that price will be able to cover up the cost of production of the power, whether distribution mechanism of power is established, how they are going to distribute this power. All this will come into picture when the marketability comes into play. That is, my supplier and my buyer are tied up or not. We have found several cases where because of non-adequacy of raw material, business turned NPA, or there are adequate availability of raw material, but there is no supplier to, there is no buyer to offtake the product, and hence account become NPA. And we have also found cases where the borrower provides a fake work order to avail the credit facility. And in that case, it becomes essential to verify the work order. Now, I may sound impractical to you when I talk about so many due diligence mechanism, but here I want to make one point very clear. It is not necessary that you have to undertake all this mechanism for each and every loan and for each and every ticket size of the loan. It is not at all necessary. What I am saying is that What I am saying is that you do this due diligence in as and when basis. As and when basis means wherever you are finding any kind of risk, there you do this particular due diligence. all due diligence may not fit into all the requirements. Okay, just as a doctor, when we go to a doctor, we tell our symptoms. I and somebody else may have similar symptoms, but doctor will prescribe some test for me and some test for some other person. The test may not be same. Same is the case that based on whatever information you are generating at each stage, you proceed with your further due diligence. It is not that since madam has told all this, this has to be done. No, it has to be based on the situation, amount of loan, level of risk, and based on whatever understanding we get at each stage, right? Now I share with you one example. There was one account. They requested for a loan from our bank. And there was huge follow up for that loan within a very short span of time. Okay. Now, this person told that they had received work order from NSIC, and the entire loan which he is asking from us is for execution of the work order from the NSIC, which they have received from the NSIC. Now, since the entire cash flow was dependent on the work order of the NSIC, we sought a confirmation of the work order from NSIC, asking whether they have issued the work order or not. For 2-3 days, we did not receive any reply. Then we received a verbal information that the work order was not genuine. So it is also essential when we are testing the market feasibility, we have to go for verification of the work order. And in general, in project finance in India, largely comprises of setting up of some iron and steel factories, or it is also setting construction of different projects of the government. That also they undertake. So whenever any work order is issued, suppose they are working on some existing work order, what is the status of present work order, whether it is maintaining the existing timeline, what about the amounts which are being credited with respect to work order, in which account this work order amount is getting credited, all this needs to be ensured. I hope I am clear up to this and there is no hiccup with respect to my this thing. I will take these queries. As I proceed further, I was just checking in the queries. So this thing needs to be ensured. So once the promoter background is checked, once the projects are vetted, project report is vetted and possibility of capital infusion is done, market feasibility is done, then comes the preparation of the appraisal. Before going for preparation of the appraisal, bank does two things. Bank will go for the title search report and valuation report of the property which the entity is willing to mortgage. Generally, the entity goes for mortgage of the land and building where the project is going to set up, and uh, and some additional collateral he may provide in the form of additional security. This TCR, title search report, valuation report, need to be thoroughly studied. It needs to be ensured that bank can create charge on that property. The property is having a clear title. There is proper demarcation of the land. The entry and exit of the property is independent. That is, it is not dependent on someone else's entry and exit. And bank can go for SARFAESI action if at all it is required. Everything is done up till now. Then bank prepares an appraisal note mentioning every detail about the promoter, about just for a second. Now, once this particular information is gathered, bank prepares the complete appraisal note and then goes for a decision of sanction. When banks provide a decision for sanction in project financing, bank generally provides certain specific condition that disbursement will be made on stage-wise basis because a project takes quite a long time to set up and start the commercial operation. Then a bank will also stipulate that the capital, whatever is mentioned in the project, that needs to be infused. If at all any cost escalation takes place in the project, then that extra cost need to be provided by the promoter from their own source. These are certain things the bank will stipulate, and the first tranche of disbursement will take place. Right now, since project takes a lot of time to get established, it is also very essential to monitor the progress of the project. Now, every other day, the banker cannot go and check and stand in front of the project that whether it is going as per envisaged plan or not. So here comes the role of a entity known as LI, that is Lenders Independent Evaluator. This person, LIE, is appointed by the bank, and at a frequent interval, this LIE will go to the project site, and based on our sanctions, he will cross-verify the progress. Progress as in whether the project is moving based on the estimated implementation schedule or not. Whether or whatever disbursement has taken place, for that all the bills, invoices, receipts, everything is kept in the record of the bank or not. Whether at a different stage, whatever approval needs to be taken from different authority for construction, clearances, everything, whether those are taken place or not. Whether from the books of account, the capital is actually infused or not, what records are available, whether the construction is as per the sanction plan, construction is taking place as per the sanction plan or not. He will do complete study, and on frequent interval, he will keep on giving the information to the bank that project is as per envisaged plan. And if he sends any kind of disagreement, he may give an information to the bank that certain additional condition needs to be given, or the borrower is required to provide certain documents to satisfy upon that particular factor. That is like a warning signal for the bank that the project is moving some other direction instead of the accurate direction which it has to move. And based on this LI report, the bank takes call on further disbursement, and the bank also does the annual review of the account. Because you all may be aware that project financing is riskier, because in case of delay in DCCO, date of commencement of commercial operation, that may also lead to account turning NPA. If in case of infrastructure project, for 2 times the date of commencement of commercial operation can differ. Whereas in case of non-infrastructure project, only 1 time the date of commencement of commercial operation can differ. Beyond that, the account will be straightaway classified as NPA. And you will appreciate that NPA is such a big headache for banking industry overall. Every bank is trying to reduce their level of NPA. So due to this technical reason, if it turns NPA, it will be a huge dent in the performance of the bank. Hence, monitoring of the progress of the project is extremely essential, right? So up to this, I hope it is clear. Now I come to the second point, the next point, which is verification of the supplier. See, when a lending decision is taking place for a project, lot many people come into picture as a supplier, as a service provider, as a contract person for the project like that, and it is essential to do a complete due diligence. Many times the borrower provides the complete list of supplier, which becomes the part of the proposal note itself. Now suppose a borrower says that ABC company is going to provide me with this equipment. That has become a part of the proposal. Now, when the loan was sanctioned, instead of ABC, the promoter is saying now PQR is going to provide me. Then again a red flag arises and deeper due diligence need to be done. Because it may so happen for the purpose of sanction, the name ABC was incorporated, but they are dispersing the amount to DQR and fund may get diverted through that source. In that case, it is essential to raise a question that why you are not buying from ABC right now. Whether there will be any price difference between ABC and DQR, whether there will be any quality difference between ABC and DQR, because if the quality of the equipment varies, it will have impact in the performance of the entity also. An entity may not be able to generate the cash flow as envisaged. In that case, again, a TV report may be obtained and then a modification in the sanction may be done. This is also a very vital part which needs to be ensured when going for supply matter. Before I proceed, one more point I would like to add here. In case of project financing, it is also very essential to check what is the level of power supply which is envisaged for the project. Okay, so if the project is of say production of a clinker or a cement unit, but if the power capacity which they are applied is only 1 horsepower, whether that will be sufficient or not. What is the arrangement of power done so far? Because we have seen several projects where they are saying they will set up a genset for the project. It is next to impossible. So these kind of red flags also need to be checked. Now coming to verification of supplier. First and foremost, along with the detailed project report, generally the borrower provides list of tax invoices. Okay, pro forma invoices, that who are going to be the supplier for which equipments and all. We have to thoroughly read the invoice and also see that if the delivery is not done on time, then what will be the cancellation cost, what will be the cancellation terms and conditions. This we need to read. Then also read the name of the supplier, the address, the GST number of the supplier, and we can also check the GST in the GST search and see whether the supplier exists or not. Then if the supplier is the company, I would also recommend check the company details in the MCA, whether it is struck off, active, what is the capital of that entity, because we have seen in accounts which have turned bad that the supplier uh, on whose behalf payment was made for crores and crores of rupees, the authorized capital of that supplier in MCA appeared to be 5 lakhs or 6 lakhs. It means it was a shell company and the fund was diverted. Okay, so it is also essential to note whether the supplier can financially supply that equipment. Yes, if he is doing a brokerage work, that is feasible. But if it is a manufacturer, then it is a red flag that with small capital he cannot honor a large business commitment. Right? So this need to be checked in MCA and the GST numbers to be checked. Then a confirmation in case, again I am saying it is not a standard rule, but where you are seeing that the supplier is going to supply major chunk of the equipments of the project, a confirmation to be obtained that they have issued the invoice and the transaction is under progress, like that. If any advance payment is made to the supplier by the project people, then the money receipt of the same, and also to check the account statement when the transaction has taken place. This too needs to be ensured, because we have found cases that a money receipt was having a separate GSTN number, pro forma invoice was having a separate GSTN number. These are certain red flags which we need to check before disbursing the amount. And in this way, all major suppliers need to be cross-verified and all the invoices, pro forma invoices need to be kept in record. Next comes the stage of stage-wise disbursement. See, in project financing, once we sanction a particular loan, our role do not end there. Our role becomes even critical, because dispersing sanction is still easy. We are not parting funds, but disbursement is very, very critical, because we are parting fund in each stage. So when disbursement takes place, it is essential to keep a copy of the sanction letter and check what all sanction terms and conditions are complied so far. Many a terms the promoters say they will infuse capital, but the infusion of capital might not have taken place as envisaged. In that case, disbursing amount will damage the debt equity ratio, also lead to a major compliance. For stage-wise disbursement, a disbursement note is prepared mentioning name of the borrower, what is the quantum of loan, how much amount is disbursed, what is the condition pertaining to stage-wise disbursement, and it is generally advised before each stage of disbursement, one inspection need to be carried out to ensure the progress is taking place. And if LI is appointed, whatever comment the LI has given, that need to be incorporated in the disbursement note. And the vital part which comes into picture, if the project person need to infuse capital in proportionate to disbursement, that ratio needs to be ensured, that he is infusing capital by way of CA certificate, by way of account statement, by way of pass 3, by way of LI report, anything. Now the justification needs to be mentioned that for what purpose the disbursement is taking place. If it has to be directly paid to the supplier, yes, it has to be directly paid to the supplier in all normal cases, and whether supplier due diligence is done or not, then it has to be disbursed. The amount needs to be disbursed. Now, before I go to the last two uh, um, points of certificate of completion and certificate of commencement, I would like to cover certain other gray areas in project financings, which are major threats. Many a times what happen is that when a customer takes a credit facility for a project, they say that they are going for a tie-up with some company with respect to project. Say I am setting up a solar power plant. I am saying that I am going to have PPA agreement with A. I am going to have PPA agreement with B. I am going to have PPA agreement with C. There we have seen cases that loan was disbursed, and after that maybe one PPA agreement copy was given to the bank and there was no follow up further, and the PPA agreement copy also got expired. There is no further PPA history in the record of the borrower. So the underlying purpose of any project, all the document need to be obtained, kept on record and properly vetted. Again, it is seen that the many times they say that project will be the cash flow will be generated through this PPA agreement, but no credit comes into account from this PPA. It is rather from some other account of the borrower, the amount gets credited in the bank's account, which is also a very, very big red flag. So whatever is the purpose of the project, that needs to be ensured. And it is essential to monitor the account from time to time to have an idea about the nature of transactions which is taking place in the account. Again, there are certain instances which we have witnessed, wherein suppose a disbursement is taken place. Say I am saying that I am going to purchase stock from Mr. ABC. Disbursement was made to Mr. ABC, and within 2-3 days of the transaction, that amount from ABC has got credited in my account after deducting certain portion. Say my disbursement was 100 rupees. After 3-4 days, what I witnessed that the credit in my account is 80 rupees. So this kind of round tripping of transactions may also take place. Again, some disbursement of the term loan may also be made to some unrelated party. Suppose I am dealing in iron and steel, but the disbursement was made to some gold jewelry seller like that. This kind of instant, because the person will come and give n number of bills to the bank. So it may become impossible for the bank to check each and every invoices, and these kind of incidents, they take place. And certain other challenges which arises in project financing is the when there are multiple banks and when there are consortium lending. I understand that you may be having this fair idea about consortium lending, where there is one lead bank and there will be many member banks, and the lead bank will prepare the appraisal note, ensure documentation, and In that case, what happened? The member bank will remit the amount to the lead bank. The amount will be kept in the escrow account of the lead bank. And from escrow account of the lead bank, all the transactions will take place. So many a times when there is negligence in monitoring this kind of escrow account transaction, or when the lead bank method of due diligence becomes weak, then the whole account can turn NPA. So this risk is also very much there in the business with respect to project financing. And in multiple banking, it becomes even more difficult, because in multiple banking, each bank will have separate books of accounts. Each bank will have their own sanction notes, and there may not be sharing of information with one another. So in that case also, it becomes very, very difficult to monitor. Another important points which comes into picture is what is the terms and conditions stipulated with respect to maintenance of account. Maintenance of account means generally when a bank lends loan to any borrower, then bank says that all transactions should be routed through our account, so that we have complete control over the cash flow of the entity. Right, but it may so happen the entity, without the knowledge of the bank, maintaining current account with some other banks. So what it seen is that initial 5-6 months the disbursement are taking place at a larger level. After that it is dried up and there is no credit to the bank's account. And RBI has also stipulated conditions with respect to maintenance of current account with some other bank. There are certain restrictions and radar where the credit facility is more than 5 CR. So this needs to be ensured, and for that reason I keep on repeating that how the account statement conduct is going on, since it is a newbie. Anything which is new, even for a small baby, we do a lot of hand holding in their initial stage, right? So when it is a new account in project financing, it is essential to monitor what kind of transaction is taking place. It will take hardly 5 to 6 minutes to check this, and we can get hell lot of information, right? So once the project is has completed the implementation stage and everything, next comes the point of certificate of completion. Whether the certificate of completion is obtained, whether clearance from the municipal authority is obtained or not, and whether the trial run can be done or not. Once the trial run is done, and then the project can go for certificate of commencement, and then they can commence the project. Once the project is commenced and cash flow is generated from the project, we call it achievement of DCCO, that is date of commencement of commercial operation. From that date, the project becomes independent for generating their own cash flow. Prior to that, it was dependent on the lending facility extended by the bank. So this is the whole gamut of the project financing. Again, I would like to summarize the challenges. Challenges is promoters' background. Many a times they come up with a project report just to obtain the credit facility from the bank and defer their debt burden uh, in the project, in the overall gamut of the project. This is the first thing about the promoters. Then project report, many a times the project report are also prepared in a haywire manner. It is essential that we take a help of a competent individual to scan the project report and vet the cost and means of project. Like construction of land and building, suppose someone is saying 200 crores, whether it will be actually 200 crores, whether plant and machinery invoices tantamounts to 50 crores which they are putting. These study need to be done. Next is capital infusion. I have showed you certain tools through which we can check the capital infusion. If there is investment from any associate entities and all, proper due diligence to be done about the associate entities as well. Then proprietorship, partnership, I have shown you from ITR, we can generate the information. Market feasibility, I told that buyers and suppliers to be checked. If any work order is provided, then the copy of work order is to be obtained. Confirmation about the work order we need to obtain. In vetting of project report itself, verification from the chartered accountant, then any outstanding income tax demand are there or not, these things need to be checked. Another point here is, in case of companies, Caro report is now available, Caro 2020, and this Caro 2020 is really effective. It is providing quality insights about different entities because they need to cover 21 points, and those points are very practical with respect to bank. That is, whether they have any acquired any property which is not yet registered, Benami property, whether any property is being leased out, who is the leaser and who is the leasee, what is the, I have seen company like Raymond's. They have taken property from their associate as lease, and they are paying a lease amount of 50 crore per year. So this lease may be one of the method of diversion of fund. So from Caro, we get to have all these ideas. Then they have to mention if 5 crore and above working capital facility is availed, whether the quarterly statements are being submitted to the bank, and as per the statutory auditor, whether there is any difference between the statement submitted to the bank and the statement which he is auditing. In case of Caro report of Birla Tires, there was humongous gap reported by the auditor with respect to the statement submission. Then they have to comment on issues like what is the position of the stock, whether there are any stock in trade, this particular factor. 5C and above credit facility is there, then how is the repayment, whether there was any delinquency in the repayment or not. Again, in Raymond, there were lending, unsecured lending between the groups. These are some red flags reflected in the Caro report. Then they have to also mention about the instances of any frauds which was reported in the company, whether the company can be referred as a going concern entity. A very, very vital point from the point of view of a company. In case of Birla Tires, though the audited balance sheet is not available in their website right now, but if you can pull their annual report 23, in Caro it was mentioned that their amount of liability was much, much more than their amount of asset. So the auditor is of the opinion that the company cannot be a going concern. Again, in Caro, they need to mention whether there was a negative cash flow for the last 2 financial year or not. So if you are not getting time to read and completely analyze the balance sheet and PL of the companies, at least by going through the Caro report, you can get a fair idea about the health of the entity. And this is one of the master document for due diligence, which you can use. So this can be also used in project financing. By reading Caro also, lot many inputs can be derived. So then I told you about the progress of the project, frequent inspection. The report from LI can be a vital document to assess the progress of the project, and also how the disbursed amounts are being used. That will give you an idea. Verification of supplier, you can verify the GST number, you can check the invoice, any past payment is made or not, and confirmation from supplier. Another important document which can be used here is e-way bill. whenever the any disbursement is made for any supply from one state to another, the e-way bill number can be verified online. That also gives you an idea that the particular good was moved from one place to another or not. Then stage-wise disbursement, we need to prepare the disbursement note considering the amount of capital which is infused, the loan which is being taken, and verifying other facts and figures of the sanction. The disbursement note is to be prepared and amount need to be disbursed. Then in multiple banking, consortium banking, escrow account comes into picture. Then finally, we take the certificate of commencement, completion, certificate of commencement, all other licenses which are applicable for the particular business, and that has to be kept in the record of the bank. So this is the overall thing about project financing and the due diligence. And as I told you, we have to ring fence the transaction of the account, and ensure that account transaction are routed through one particular bank only. And it is not that they are maintaining current account with n number of banks. This has to be also ensured. Now for the remaining 15-20 minutes that I am having right now, I will be taking all of your questions, and for this I invite questions from all of you. So you may start putting your questions. Is it the lender's responsibility to ensure revenue from? Yeah. I take this question, is it lender's responsibility to ensure that realization revenues are from running account bills are used exclusively for the project? See, suppose I am taking up a project of supplying a solar power to an entity, right? The lender has to ensure that the cash flow is coming from that project, because it leaves the bank with a threat that tomorrow if the cash flow is not stable and it is not coming into the business, then the repayment of bank's loan will go bad. So it is not lender's responsibility to reach the last mile for recovery. No, that is not the role of the lender. The role of the lender is to ensure whatever is mentioned in the project as a source of finance, as the cash flow generation mechanism, that is properly taking place or not. If it is not taking place properly, then the lender has to reach out to the borrower and ask that what is the status? Why this amount is not coming into the account? Is there any issue in your business cash flow? Or are you revising your agreement with your customer? This question needs to be answered. So I hope this query is clear now with respect to realizations of the revenue in the running account. Now let me see any further questions. See, one question has come up, why procedures are ignored in bank for the purpose of target. It is a completely non-technical question, but I would say that it is not that completely the procedures are flouted for lending. There comes a challenge in project because even for a short period of time, if it is not being monitored, then it leads to an issue in the proper due diligence. I am moving to the published questions once. Let me see.
And we have some questions in the new questions also. Yeah. CMA in Kannan, he has asked, in case of 100% export projects, any special points? Please elucidate.
Yeah. In case if it is an export project, further due diligence needs to be done. in that case, we check the ECGC SAL list. SAL list is a special sanction kind of a list where we will check the person with whom he will be doing cross-border transaction. That person is listed in that particular list or not. It is like a negative list. That means the concerned buyer party has somewhere defaulted in an international trade. So ECGC SAL list need to be checked. Number two, we have to also take into consideration the risk arising due to currency fluctuation. Because if it is 100% export, then the currency fluctuation risk is humongous. So that hedging part is being done or not, that need to be taken into consideration. Then we need to also check which all countries he is going to deal. Whether the countries with which he is going to deal, that entity is somewhere in the sanction list or not. Because you must have heard about TBML, trade-based money laundering. Whether there are possibility of this trade-based money laundering, or there are Financial Action Task Force, they come up with several restrictions from time to time. FATF list whether he is there or not. This need to be checked. Now, if it is an export transactions, I am sure it will not be a cash-based, fund-based transaction. In export transaction, they generally go for documentary credit facility. That means against letter of credit, against bill discounting like that. So if it is a foreign letter of credit, how the letter of credit is to be ensured? Who is going to be the beneficiary? How the invoices is obtained from other country? All this due diligence comes into picture. And since letter of credit is a documentary credit, that means the banks need to only check the documents, not the underlying trade transactions. The possibility of fraud, TBML, the money laundering increases. You must have read in newspaper that some narcotics were exported in the form of trade-based activity. These things comes into picture. Then further due diligence by way of UCPDC guidelines and everything comes into picture. So export adds one more layer to the mechanism of due diligence. Yes, next question.
Next, ma'am, S.N. Mukherjee sir, he has asked, even after taking so much control measures, why there are so many NPAs?
Yeah, see, control measure is not a one-time mechanism. The control measure, which I have told you, that is largely pre-sanction mechanism. Before the stage of disbursement, lot many stages I have told you. But once the fund is disbursed, then comes the real challenge of monitoring. First, at the stage of disbursement, it needs to be ensured that the fund is disbursed for the right person and right purpose for creation of the asset. Many a times it is seen that for creation of the asset, it has not taken place. Second thing is, once the fund is disbursed, then continuous monitoring of the account is necessary, and also to raise a red flag from time to time whenever any early warning signal is witnessed in the account. Many a times due to operational challenges, these things do not take place in banking industry. As in when the credit decision is taken in a consortium advance, then all the member banks and lead banks may not have a consensus to go for a harsh decision at one go. And that delay further leads to delinquency in the account. Or in multiple banking, there is information asymmetry between the banks. And many a times, by the time the bank identifies the risk, every damage is done. We cannot get further recovery. Or it may so happen that based on very high collateral coverage, bank has taken the decision and the property is not being able to sell. Like Kingfisher's property. When Kingfisher lending decision was done, it was having a very significant security coverage. But today, again, the same property, to sell the same property, it is becoming a very hard task for the bank. So And these are some of the intentional part that I have told you. Sometimes unintentional issues also happen, which is beyond the control of the bank and the borrower. That particular product start becoming obsolete. You might have heard this HNGL, Hindustan National Glass Limited. Though they were one of the pioneer in supplying glass to Kingfisher for the liquor bottles and all. Very good company having a very strong financials, but the company could not survive. The reason being the sole supplier of the sole customer of the entity was Kingfisher. And when Kingfisher started suffering, HNGL also suffered a lot. So there are also reasons beyond the control of the bank and the borrower because of which the account turns NPA. And in larger credit, monitoring becomes real difficult because lot many banks, lot many individuals come into picture. Every bank is disbursing from their own account. It is, even if you are willful to monitor it effectively, it becomes real difficult because I cannot go to SBI and say you open your account, I am going to screen this account. No, that is not possible. So these are some of the reason for delinquency. Yes.
What are the documents required for promoters' contribution?
Yeah, the documents which are required for promoters contribution, one of the fundamental document which satisfies everyone is the CA certificate, but that is not at all foolproof. Second, we need to check because CA certificate is like a, see, we do take sick leaves and all, right? So we can go to a doctor and say that I am feeling sick, please provide me with a sick leave certificate. These are happening in India. Same as the CA certificate. So that is not foolproof. So second thing is through which account the transaction was routed. That transaction trail is very, very essential, whether that quantum of amount was routed or not. In case if it is a company, then MCA, we have to check the MCA, the issued capital amount must have increased after the infusion of the capital. If it is, and also PAS 3 certificate, PAS 3 certificate, that is also a very important documentary evidence. In case of proprietorship partnership, see, in proprietorship partnership, the amount do not remain in the business in the form of capital, unlike company. Through transaction, the amount moves here and there. But at that point of time, at the time of infusion of capital, if it is 31st March, then by cross verifying with the ITR, we can get an idea because nowadays in AIS, annual information statement, these transactions are recorded. So that can also be a foolproof. Another practical mechanism is when we go to inspection, we check the assets which are present, we can make a rough estimation that whatever disbursement bank has made and whatever asset the entity has created, the amount of that asset should be somewhere more than the amount of loan disbursed by the bank. So the difference will somewhere reflect the capital infusion. So these are the mechanisms which are to be adopted.
What kind of debt equity combination would you suggest for project finance for various industrial segments like manufacturing, healthcare, etc.?
Yeah, the debt equity ratio, the total debt to equity will be somewhere 4:1, and term loan to equity is somewhere 3:1. This is the ideal ratio which the industry practice is there.
Okay. What stops the banks in continuously monitoring and take corrective action at the first red flag?
Yeah, that I have already discussed that in consortium it becomes a challenge. You have to call for a consortium meeting. All the banks need to give a consensus. Sometimes all the banks do not give the consensus. Delay takes place. The borrower also comes and requests. At that time, certain emotional decisions are also taken place. These are some of the challenges because at immediate red flag, we cannot completely shoo away the borrower, right? Like a student, if a student fails in mathematics in first term, we cannot say that we are going to expel you from the school. Same happens with the borrower and in banking industry. And that somewhere leads to further trouble.
Okay, ma'am. So we have received many questions, ma'am. So
Yeah,
I'm just taking it as the final one
yeah,
for today.
yeah.
His Who are eligible for CEB consultants?
PV consultant, generally a valuer who are having expertise in the valuation. Then even a professional like chartered accountant, CMA, they are considered. But along with it, the bank prefers any entity having experience of varied industry, because TV is largely checking the viability of the technical side viability. So until and unless an individual or his team is not having the expertise to check the technical part, then it becomes very difficult. So that is why these are the basic criteria banks keep for TV consultant.
Thank you so much, ma'am. It's really means we are really enlightened by your session today, and we will
Thank you
upload the
so.
presentation also, ma'am, in our portal as well. So,
Okay.
thank you so much. With this, we have come close to this question answer part. So, now I would request CMA Dr. Aditi Das Gupta, madam. She is the Joint Director of our institute for the vote of thanks. Ma'am,
Thank you so much, ma'am.
thank you.
Thank you, Indrakshi. Thank you, Sumitra ma'am. We are grateful, ma'am, for the time and effort you have dedicated for preparing and delivering such a thought-provoking presentation. I'm sure, I'm very much sure that we all have enjoyed this seminar. Your contribution has added immense value to our event, and we definitely look forward to an opportunity to learn from you once again in the future. I mean, it's a meaningful impact on our audience, and it was an outstanding speech, ma'am. Thank you so
Thank you
much, ma'am.
so much, ma'am. Thanks to the Institute. Thanks to all the participants who are present here with your queries. You have actively participated. Thanks to Indrakshi ma'am and Aditi ma'am and
Thank
the
you.
entire team of the
Thank you, ma'am.
Institute. And I hope I was able to share some of the insights from bankers' point of view with respect to project financing. And going forward, we can extrapolate this discussion to a further level considering the level of queries that was there in this session. So my best wishes to each one of you. Thanks a lot. I personally got enriched in this discussion and I really enjoyed this today's seminar.
Thank you, ma'am.
Thank,
It was
thank
our
you.
pleasure, ma'am.
Thank you. Thanks a lot. Thank you.
Now, to our members and viewers, here's a small announcement. It takes me with immense pleasure and pride to announce that IFSCA and our Institute of Cost Accountants of Management, Cost Accountants of India, under the initiative of BFSIB, has signed an MOU to establish GIFT IFSC as a global finance and accounting hub. This collaboration would aim to export financial services talent, develop specialized academic courses, and focus on emerging fields like fintech, aligning with global best practices. So I guess there are a lot of, opportunities are there for our CMAs to harness upon. It was a very welcome and a great move by our institute and BFSIB. With this, before we wrap up, I want to thank our President Sri Vibhuti Bhushan Nayak sir, and our Vice President CMA TC Srinivasa Prasad sir, our Chairman BFSIB CMA Chittaranjan Chattopadhyay sir, and our HOD and Additional Director CMA Dipundu Roy sir for the constant motivation, trust, and support. I would also like to thank all our team members of BFSIB board, Indrakshi madam, Shantanu madam, and the Shantanu sir and the Brother sir. Thank you all. Over to you, Indrakshi ma'am.
Thank you so much, ma'am. So thanks to participants, thanks to our speaker. So thanks to our IT team as well. So with this, we are closing the session for today.
Thank you.
Thank you so
Thanks a
much.
lot.
Thank you. Oh.